This is your LMAX exchange technical update for Thursday, December 29th, 2016. Euro dollar. So the euro remains firmly pressured to the downside, with the market now trading in the 103s down to as low as the 103s, and now focused on a retest or a test of that critical parity level further down. At this point, any rally should be very well capped, with only a break back above 108.75 to compromise the immediate bearish outlook. Sterling dollar. So cable continues with its descent after being well capped several days back above or ahead of some critical resistance, a previous base at 127.96, and this keeps the pressure on the downside, with the market focused on next key support, which comes in the 2080 area, below which would expose a retest of that 31-year low, or that plus 30-year low that we saw back in October of 2016 in the 118.40 area. At this point, it would take a break back above 128 to compromise the bearish outlook. Dollar yen. So dollar yen continues to be very well supported on dips, and the market is now focused on establishing that next push beyond the recent highs at 118.67 and towards 120 further up. We would need to see a close below 116.55 to take the immediate pressure off the top side. Euro Swiss. So Euro Swiss is trading lower, and the market is now trending to the downside with a focus on a retest of the 2016 low at 106.24 further down. Any rallies here should be very well capped ahead of 108. Aussie dollar. So Aussie remains pressure to the downside, and the market is now focused on breaking below medium-term support at 71.45. At this point, any rallies here should be very well capped ahead of 73. Dollar CAD. Dollar CAD is pushed up to a fresh multi-day high, taking out the previous resistance at 135.89, and this could set the stage now for that next major push towards 140 over the coming days and weeks. At this point, any setback should be very well supported ahead of that previous higher low at 30.81. Kiwi dollar. Kiwi remains pressure to the downside, with any rallies here seen well capped towards the 71 area, ultimately in favor of that next lower top and fresh downside towards next key medium-term support at 66.76. SPX 500. The S&P 500 is trading just off recent record highs, and the market could be poised for fresh upside beyond the recent highs in the 2280 area and towards the 2300 area further up. At this point, it would take a break and close back below 2245 to take the immediate pressure off the top side. Gold. So gold is doing its best to try and unwind from oversold readings and put in a bit of a base, but the market here will ultimately need to establish back above 1150 to take the immediate pressure off the downside. At this point, a break back below 1122, the recent low, would compromise any recovery outlook and open the door to expose deeper setbacks over the coming days and weeks.